Welcome to everyone to this new video tutorial regarding the automatic trading. With this short video tutorial, I want to show you how to start in creating a strategy if you start from scratch just by using the basic feature offered by TradeStation and some basic concept regarding the validation of your strategy. If you don't have a code, a strategy, you may want to start just by using the basic indicator offered by TradeStation, such as, I don't know, RSI, MACD, stochastic, and so on. The same indicator can be used as a strategy component. So you see here, if you look at the below side of this chart window where I'm using as instruments the stock of Nike, I'm just inserted the MACD. The same MACD can be used for as a strategy. So if you do right click, form a strategy, I'm using these two strategy components, MACD long entry, MACD short entry. So I'm using the MACD for long signal and for short signal. How it works? Well, you can visualize with the indicator. For example, if I look at the daily bar of 24th of November, you see that on the same day, if you look at the strategy text field, you may see that there is a cover signal of 76 shares and a buy signal for 75 shares. Meaning that on that day of 24th of November, I'm closing the short signal and I'm opening the long signal. That's because a former bar ago, if you look at the indicator, you see the yellow line that crosses over the cyan line. It's just the basic crossover of moving average line that from the MACD perspective it means that I have a buying signal. You can even visualize if you look at the histogram. The green part is a buying signal and the red part is a selling signal. Now you see here the green part is starting, meaning that from a MACD perspective we need to buy and to close the previous signal. You can even keep a view to the code for this basic strategy component. You see if the current bar is greater than 2 and the MACD difference crossover 0, so we are talking about this crossover of moving average line, that's a buying signal. So I can buy at market price at next bar. So that's the basic concept. Unfortunately, the thing is that when you use just the classical indicator for buying, so to open and close a position such as MACD, RSI, and so on, stochastic, and so on, the result, the performance is usually very bad. The reason is because when after a while the indicator of the oscillator, they're trying to lose the ability to detect the inefficiency of the markets, and so after a while they don't work very well unless you use some basic statement for the risk management and so on. But let's see what happens with these two basic strategy components. If you look at the performance, equity performance, it is very bad. It's really a disaster. And in fact, the performance summary says me that you lose money. We are just basically we are just using for every position we invest $10,000. So we are starting with some very basic position sizing method. Sorry. That's because, as I say, all the indicator and oscillator, they tend to lose the ability to work after a while, unless you combine, and because you see here, we are opening and closing the position just with the same indicator. But if you use some basic um, risk management statements, such as if I have a certain condition, then I close my long position, or even if the target is met, then I close as well, or if there is a stop loss. So my recommendation is to avoid the situation where you use just the indicator or the oscillator. I would recommend to include at least some basic strategy regarding the risk management, such the stop loss for long entry, stop loss to close a long position or a short position, or even a target. Let me see where it is. Target position. Okay, yeah, you need to look for a percent trading profit target. Where it? Yeah, here. Profit target, long exit, profit target, short exit. I would play even with this strategy for the risk management. So that's really important. But that's not the scope of this video. I mean, we don't want to create a perfect strategy that works. I just want to show you the basic feature that can be used, how to start to play, how to start from scratch. So we are not happy with this equity line, of course. However, TradeStation allows you for free even to modify the input parameter, and you can start uh, to think in terms of the so-called optimization process. So I might decide to change the input parameter of the fast length or the slow length, the period. Let's start to play just to show you. I want to show you what we are talking about. TradeStation by default allows you to varying from 50% the value that you see here in the parameter input. So from 8, it can change from 6 to 80 by increment of 1. And you can decide to change even a second input parameter. Now, the thing is that even the optimization, it's something that you must be very careful regarding the optimization itself. We explain even this part in our course, automatic trading, how to do the optimization. What I would never recommend is to change all the parameter altogether and with a very tiny um, change in terms of increments. So that's something that you can explore with our code. Now I just want to show you some basic example what happens when I start uh, to run an optimization process. So here we are optimizing. Let's see. Okay. Yes, I want to write. Now the optimization process is starting. Now it's a very short. Normally it takes much more time, depending on the input parameter, of course. I just want to show how to run this process. And you have here this interesting feature which is called strategy optimization report, which saves me it gives me some indication regarding the robustness of the system, which in this case, as we expect, is very low. The beauty of this process is that I might decide to change the equity, just focusing on some specific metric I like. Let me explain you. In these two columns, you see all the possible value for the input parameter that we are trying to optimize. We might decide to choose the set of input parameter which gives me the best net profit or the lowest drawdown or whatever metric you like. I tend to prefer this column, by the way. Even to be very honest with you, I'm not a big fan of the optimization process. I use it very low just to create as a sort of stress test and maybe just for a small improvement. I'm gonna back to on this point in 1 minute. So let's focus. This is our uh, original equity line, and I want to ask to apply the set of input parameters which gives me the best trace system index, something like that. Let's see what happens. Does change anything? Or maybe with best robustness index. Let's see if there is any sort of improvement. Does change anyway, but that's because once again the basic trace system is not very good. Um, But with this example, I just want to show you how you may want to start on your own. I have already run a better optimization process here in this second chart window. Same symbol, and I've just done my optimization. Now you see the equity line is a little bit better. I would not trade anyway the system with such equity line. You see here there are many drawdown and the underwater line is very bad. You see here is more than 100%. It's it's simple but crazy. You would never trade something like that. Although the last part is pretty good, but anyway, we don't like. What I want to explain you with this is that if you move from this very bad equity line to this new equity line, just varying of the input parameters, it might be very risky, it might be very dangerous in terms of using this train system in line with real money. That's because you are optimizing the input parameters, but the risk that I see is that you might over optimizing the system. So maybe you are finding a very good set of input which are perfect on the past, but very bad on the future. Let me explain you this concept with a visualization, with a very simple example. Imagine that on z-axis you have the net profit, and on the other two axes, x and y, two input parameters. This Q is just, let's say, the 3D of my equity Q, but it vary with input parameter. So you see here, for the parameter 2 and 2, the value of net profit, where I see this peak, is perfect. But if I move from 2 to -2 or -2, then you see this very bad value, meaning that there is a very strong dependency between the net profit, the robustness of the train system, and the input parameter, which is not good. I mean, if I change the input parameter, even the net profit cannot vary so much. So I would expect, if you want to visualize the concept that I'm trying to explain, is that this surface must be very smooth, very flat, not with peak and valley like that. So that's the concept. That's why I do prefer not to focus so much on the optimization of the input parameters as we have done from here to here. Optimization can be useful to make a small improvement, to a sort of stress test, but a very failed train system will never be perfect if you just want to change the input parameter. You must focus on something else, such as the risk management, and even from my personal point of view, I always prefer to use the price patterns such as the eye N1 bar ago, the close of N2 bar ago, and to have a look at the true range, average true range for the market volatility. But that's just personal choice. You can use all the indicator you like as long as you include the risk management. That's the concept I want to pass you with this video tutorial. And the optimization process cannot change a very bad trading system to a successful trading system. Can improve it, can be, the optimization can be used as a stress test, but nothing more, nothing less. So that's why when you work on risk management, we have in this workspace 3 chart window with the same instrument and different trading system. The 2 indicator I showed you, the optimization, and that's in this 3rd chart window we have the hour trading system on night. You see that's the equity curve I like. This trading system on night is working from uh, June to May 2015. Excuse me, 2014. So from here, so everything that you see on the right side of the vertical line are real data profits. So you see it's working very well. By the way, if you are interested to this trading system for night, you may want to have a look to our website tradesystem.net, where we have a list of many other trading systems. Just please keep a view to the performance and decide if there is some other trading system that might be interesting for you. We have many of them. For example, on QCOM, DIS, RAI, and even some other trading system for Forex, USD CAD, and so on. Now, back to our example, we have run the optimization. Now, let's focus, and that's the second part of this video where I want to explain you some basic concept of the validation. I want to show you how the validation, the basic step for the validation says me that my optimization it's not a good signal to go live with this trading system. I have run even optimization for our live trading system, and I want to show you the differences. So let's move to the work forward optimizer, and let's open load cluster analysis, the optimization on night that I have run before. Now, I don't want to, I cannot explain all the steps regarding the differences between the in-sample and out-of-sample, but in short, what happens is that the engine is dividing all the data in many segments where the engine runs the optimization, then it's tested on a new, unknown, unseen segment, and so on. And you get this matrix cluster where for every cell there are many tests. You can see what for every cell you have 5 tests, and all of them must be passed in order to get an overall pass for the cell itself. You see here the optimization that I have done with MACD is definitely a fail. And I advise you to have a look even in the Monte Carlo tab where you can run a Monte Carlo simulation, and I would recommend to use a number of simulation of at least 1000. Let's see what happens when I run this simulation. You see here, that's something very interesting. I have a very high percentage that my trading system, we are talking about this trading system, just to be very clear, excuse me, this one, with this optimization, it says me the Monte Carlo simulation that I have at least 9 100% chance that my trading system will lose money, at least minus 39%. And the chance to have a positive performance is very low. It's decreasing more and more. So the total return, the chance of having a negative total return is extremely high. So it says me the robust of this trading system is very low. If I exclude the in simple, then it's even more so. Yeah, you see here, it's even worse. So I'm just focusing on the auto simple. So I would never trade, in other words, this trading system. And if we focus, that's the other very important parameter of the maximum drawdown percent here, huh? Maximum drawdown, then you get something else very interesting. Now, in the previous screen we had, now it's running, in the previous screen we had the total return, and now we have the maximum drawdown percent. You see here the value are very bad. I would never trade a strategy where I have more than 90% chance of having a 40% maximum drawdown percent. It's very, very risky. So this trading system is failed. No doubt on that. While if we open the other trading system, the other strategy on night, the one that we use live, wow, wow, you see the difference. All the tests are passed, and I think I don't have to add any comment on this screen, and even the graphs says me a lot. Well, let's play with Monte Carlo analysis. Let's start with the total return, distributional total return. Number of simulations is more than 1000, and excluding simple, so we want to have a much more severe test. Let's see what happens. The, the stress test, Monte Carlo stress test is running. Let's see what happens. Almost done. Yeah, that's the result I would prefer. So you see here we have almost 100% of probability that my trading system will have a total return percent of at least 91%, at least. Now the chance to have a total return of more than 100% is decreasing, but it's fine. I don't have a probability of having negative profit, which is okay. And if we have a look to the maximum drawdown, if you have a look to the maximum drawdown here, I want to exclude the in-sample data to have once again a severe test, a tough test. It's running, and you see the green bar. It's working. Cumulative distribution. All right. Yeah, done. And that's the very acceptable maximum drawdown. So you see here, you have 95% confidence that your drawdown won't be bigger than 7%. It's very, very, very rare that your maximum drawdown percent might be 10%. The chance is almost zero. But even, by the way, even 10% is an acceptable value. So this stress test, this analysis says me that this trading system is very robust. So I might feel pretty confident to trade with real money such a strategy. My recommendation is always to let the strategy work for a while in real data with a simulated account, and then after a while to move with real money. Once again, this trading system is working live already from May 2014, so that's why we are feeling very confident that it's a very robust trading system. But once again, have a look to our website, trade.systec.net, to have a look to the performance of some instrument you might be interested for, and don't hesitate to contact me in case you are interested in some strategy trading system. All right, I'm gonna leave with this. Thank you very much for your attention, and please have a look to the other video tutorial. Thank you very much. Bye bye.